Another day of carnage within the crypto markets as well as the stock markets, which are going to be opening later on today, and that could drive prices further down. We are about to witness what could be similar to what we experienced back in COVID. Very, very exciting times if you position on the right side, which I'd imagine most of you are, because we have been explicitly bearish and 100% in cash since $92,000 to $94,000 Bitcoin price. Big congratulations to all of you. I told you the money is made in the waiting, right? And all we had to do was just simply wait, and now we're positioned to deploy the deployer dupes. Hashtag at the end over there. You can put that in your next tweet, because we have a lot of people which have done very, very well, right? You have over here Wayne Moon coming out. I have been 95% cash since Kyledoops sold us to, and very happy about that so far. I don't know why he left 5% off the table, because he should have been 100% cash, right? So we got a lot of important things to look at. I'm not here to grave dance on the bulls or anything like that. Ultimately, it's much easier for my life being in the YouTube space and crypto industry as a whole to at least make money when the markets are going up. So I definitely don't wish for the markets to continue to go down, but there are some very, very, very important things that we need to look at. We have to be realists. We have to be absolutely objective when it comes to the markets. And one thing that we're seeing is, if you look at the 24-hour rec levels, this is now increased, right? This is what we've been looking for. We said, you know, sub $200 million are very, very low amounts of liquidations, which is actually what we've seen over the last couple of weeks and months, right? You can see we hit these big green spikes so long as getting liquidated, right? We got the $2 billion worth of liquidations in one day, and then we went 1 billion, 1 billion, 1 billion, then below 200 billion, then back to 1 billion, back below 200 billion, and now we're starting to see those liquidations rise once again. Why is this important? Why should you care? It's important because it tells us when there's a major turning point within the market and a shift, right, that could potentially take place. So far, that's what we're waiting for over here as we do approach some of the key support levels, but there are some really concerning factors, and I'm going to show you why that is the case in today's show. So smash the like button if you haven't already. Stay till the very, very end of the show, and subscribe to the channel if you're not already subscribed. Make sure you do follow me as well on X. You can see my X account over here is at Kyledoops. There it is with the blue tick over there. There is links in the descriptions below to these socials. We have been short, right? At least within Whale Room. So the Whale Room community has absolutely crushed it. Farouk taking the short trade over there. With that short trade, of course, now playing out, right? There it is. There's a short trade. I've also been short in Whale Room over here. We started to build the short position, saying that, you know, that wick over there is most likely safe at that $88,000 region, as long as price can't get back above Wednesday's high, which is very, very unlikely. The short trade is most likely to play out. We've now fulfilled the short trade over here, and the question is, what comes next, right? Well, if you look at the Asia markets, which have started to open up, it's been pretty brutal. Hong Kong down 8.7%, Singapore 7%, Japan 6%. Poor Japanese wiping out all of their gains. They took like 25, 30 years for their stock market to recover all the way back to form a double top, and now it's back down, right? So anyone who traded that as a breakout trader absolutely wrenched. China down 5.5%, Malaysia 4.2%, Australia markets 4.1%, Philippines 4%, and New Zealand 3.6%. So circuit breakers are starting to go off, right? What is a circuit breaker? It's where the stock market halts trading, right? They, at least in some markets, they even ban short trading so that you can't continue to drive the market towards the downside, right? So here's the markets that hit circuit breakers: China, Taiwan, Japan, the Russell futures, Australia, and Singapore. The VIX is up massively. We've been looking at the VIX, right? The VIX is one of the things that we've been focusing on over here. We said, like, anytime that it spikes basically into that 50 region, it's formed a major, major low within the market. So here's your stock market, right? Futures have opened, futures coming down, definitely into key support, right? Risk to reward, this theoretically makes a very, very, very strong buy opportunity, at least when it comes to the stock market. But I'm going to outline some of the at least overhanging risk factors, especially with how it pertains to crypto specifically, right? And where does that come into play? Where that comes into play is going to be over here, right? I'm going to just draw a big circle around it. There we go. That low and that low. If you look at the stock market, where's the stock market right now? Well, the stock market has taken out those lows. Why is this important? It's important because it's taken out both the April and the August low. Bitcoin, however, Bitcoin was actually trading a little bit high up. So there was a bit of a divergence. Bitcoin put in its major low at $49,000. And the point being is if crypto markets have to catch up to what the stock markets have done, then it could get absolutely terribly ugly. And you could see if Bitcoin doesn't hold these key lows that we have outlined at between $68,000 and $73,000, that means that it could cascade lower and it could play catch up to the stock market. So where's Bitcoin currently trading? Well, in relation to this chart, Bitcoin is still trading somewhere up here at the yellow line, which means it hasn't played out this downside move. And if it does play out this downside move, it means Bitcoin could sweep below $49,000, right? So you could see Bitcoin down to $50,000 as soon as today. And this is where you need to make a really, really tough decision, which is what I explained in quite a lot of detail on the video that I did on Saturday before this dump actually took place. I said, these are the things you need to be very, very careful of. Is you have to ask yourself the question, has Bitcoin decoupled? And the conclusion that we came to is that it's absolute wishful thinking, and there's absolutely very little chance that it has decoupled from the stock market, meaning the stock market goes down, Bitcoin and crypto move towards the upside. Very, very unlikely. In fact, we've only seen that happen 1 time out of 10 times in the past, right? And consequently, the probability would be on your side to expect that Bitcoin and crypto is going to play catch up to the stock market, which means we may see it get really, really ugly for the crypto markets today. So we'll go over the levels. We'll look at everything in today's show, right? So with that being said, this is key support for the stock market. You can see the strong horizontal. You can see the 200-week moving average. And we did identify the bearish divergence at the time while it was playing out during, of course, that December-January period over here. And we waited for that break of structure. As soon as we got the break of structure and we lost $6,000, we were very, very bearish on this channel over here, looking for much lower prices at our first target level coming into the 50% of the wick, the second target level coming in where price pretty much is right here. And I guess I haven't put in a third target. Let's take it as it comes. We'll wait for price to probably bounce off of this zone. And then you need to watch for the lower high, right? Which I think is probably going to be the more likely outcome given this move. I think that it's very unlikely that you're going to see a V-shaped recovery, which is what many people may hope for, right? Now, some of the other problems that you have to look at over here when it comes to how Bitcoin is reacting, and then you have the stock market here as well, is a lot of people are comparing this to the, at least the COVID dump that occurred over here, right? And they're looking for that V-shaped recovery. But the difference is that back at that point in time where we had the COVID dump, Bitcoin was not in a bull market yet, right? Bitcoin had just come out of a bear market. It had a little bit of a pump up and then it started to retrace. It then came back again to set in a lower high. And then you had the COVID dump, right? The difference that we have right now is Bitcoin has essentially played out a bull market. Bitcoin did a 7x off of the lows, which means massive overextension away from the means, which means that if the market does get really, really ugly and you do play catch up to the stock market, well, then you could easily see Bitcoin come back down towards fair value. And fair value is going to be closer towards that $50,000 region. I'll show you why, right? I'll show you why in today's show. So stay tuned until the very, very end. Anyway, let's continue. That's the stock market. Stock market looking attractive, coming into very, very key areas. If you are liquid, which you should be if you've been watching the shows, at the very, very least, you can make some massive gains off of these at least bounces from key supports. So that is QQQ over there. We got Tesla. We'll see what happens with the market open later on today, but I wouldn't be surprised if Tesla does actually break down and take out those lows. We spoke about major value coming in Tesla at about 167. And then if it got seriously bad, you're looking at about 112. I'm not really ready to call that yet, so we'll take it as it comes. Here you got NVIDIA. We also spoke about NVIDIA breaking down the structure. We look for all the short opportunities along the way. And you got NVIDIA coming in with fair value over here at about 75 as the 200-week moving average does rise. So if you are someone that actually wants to take these trades, remember, there is a place that you can do it over here. If you go to the link in the description below, we do have BTC.D. They're running a $60,000 campaign where you can win a trading competition over there. And I've just given you a bunch of very, very easy trade opportunities, right? So on BTC.D, you can trade crypto stocks, commodities, and Forex pairs. I love it for the stocks over here because it's got the crypto-friendly platform over here with our usual leverage slider and everything that us degens have become very, very used to. So if you do want to trade that, use the link in the description below because it does qualify you as well for a sign-up bonus. Now, let's continue, right? We're also looking at the DXY pulling back over here. We'll see if this finds major support over here. Remember, typically if the DXY does hit this level and bounce, that's going to add more pressure to risk on assets. We've been studying the VIX over here, again, just showing you in the prior times over here with the orange chart being your S&P 500, that being the stock market. Every time it comes down into these low regions, you do find major lows, right? So we saw this one. The last one that we had that was significant was the yen cash carry trade and one that came down into this key level. We got a beautiful bounce off of that. So will we see that repeat once again? And how does it relate to Bitcoin? Well, one way that I relate this to Bitcoin is using this trend line. I divide the Bitcoin chart or the USD pair by the VIX, which is your volatility index for the S&P 500. Long story short, when that chart comes into this trend line over here, typically we see a reaction off of that, and that does mark a major low, but it's still got about another 21% downside before hitting that key level. Now, that 21% downside move could easily drop Bitcoin through some of those major support levels, and there's a lot of big players that are going to be under massive pressure when it comes to their average entry. One such player is Michael Saylor, right? We can see Michael Saylor has a massive amount of Bitcoin, $40.75 billion worth of Bitcoin. And if price goes below that green line, which is about just under $70,000, he's officially in the red, right? He's officially in the red. Will he buy the dip is the question, right? We'll see later on today. Remember, this is attached to all of his major tweets. The last big one that he made over here was on the 31st of March, where he put in a massive buy. He does still have some, at least, liquidity available to deploy into the market. But the problem is that his buys become bigger and bigger towards the top of the cycle over here, which means he drastically increases his average entry, whereas we usually want to find ways to reduce our average entry in the market. And this puts him in a very risky position where he has to constantly find ways to at least raise new funds and new capital. Otherwise, this is going to make the headlines, right? And that drives additional fear within the market. If you do see him losing this key level over here, which is your little green dotted area that's rising towards the upside, that is his average price, right? Microstrategy as a company at least. Okay. So let's have a look at Bitcoin. Now, again, I want to outline some of the bigger risk factors over here. We spoke about this quite significantly at the time when we broke below the 21 exponential moving average and it started to roll over. This was a bit of a warning sign. I did a lot of videos at the time when price put in this week over here, and I said already towards the end of February over there, what you need to be really careful of is this, right? A lot of people are comparing the price action to this over here, whereas I said, based on many different factors like bearish divergences and things like that, that it's actually more likely that we are in this zone over here, where we, in 2021, we had the dump, we pushed back towards the upside over there, and then we ultimately led into a bear market. And I said, well, what happens if this price action is going to unfold over here? And so far, it looks very similar to that, and it has been unfolding, right? Now, these are the problems that we have at hand, right? The problems that we have at hand, if we go onto some of the high time frames like the MACD on the 2-week scale, as well as the MACD on the 3-week scale. Let's actually quickly bring that one up because I think we've just had a major close, right? Well, you can see the MACD is crossing towards the downside, but the problem is the moving averages are also crossing from a height. What this suggests to you is that, again, there's massive momentum. And you go back to the comparison of COVID, right? A lot of people are comparing to COVID. So if you look over here at the comparison for COVID, and we'll just quickly highlight it, it's this region over here. Let's throw in a vertical line. So we got the exact spot over there. And then let's expand this, right? Here's the difference, right? The difference is this. Look at where the MACD was when COVID took place. The MACD was not overextended like it is right now. This is the equivalent. Imagine you went into a COVID-like dump, but the MACD had just crossed over all the way at the top over there. Well, that's essentially what's happening, right? Which means that you need to be very careful when it comes to trying to knife catch and buy the dip. And I just dropped a message to the 𝗪𝗚 members literally this morning over here in the Discord. So if we go through to the present message over here, I said, a lot of people are comparing the current price action to COVID. But what worries me is that Bitcoin already did a 7x from the lows, whereas with COVID, you hadn't even really started the bull run yet. Now we've already essentially had a full bull run for Bitcoin specifically. And I said, you just have to be so careful, right? I'm typically a very aggressive buyer of crashes. I have a 100% hit rate when it comes to buying the dips in major crashes like COVID. I've done it very well in the past. And I said, but this time, I'm not sure I'm even willing to actually pull the trigger unless there's a break of structure and we create a higher high. And the reason why is because of that overextension away from the mean. right? We're not in the same environment. We've already had a big move, which means there's so much money that could unwind. And I made that note over here as well above head for them. And I said, if we saw true capitulation and Bitcoin drop to $40,000 today, a price-based capitulation, which would also be a sentiment-based capitulation, because you still see people holding on to that hopium right now. If we saw that, maybe then I'll just close my eyes, blindly buy, and move it onto a ledger. But am I willing to, try and catch a falling knife right now? I'm not 100% sure, right? I'm not 100% sure. So I'm being very, very careful because of this overextension, right? And I know there'll probably be people in the comments that are calling this a lagging indicator. It all depends on how you utilize these things, right? We need to utilize these things with context and in confluence of various other different factors, which we've done very, very, very successfully, both now and in the past. And that is why one reason I'd want to be very, very, very careful, right? So that's what we're looking at over there. We've seen a decline in the volume to exchanges, right? So the 7-day daily exchange volume continues to diminish, continues to move towards the downside. And that means that the market can easily squeeze out that last bit of liquidity. Not only that, but again, this is another reason I want to be somewhat careful, is if you look at the positioning of the funding rates, the funding rate average is still positive. If the funding rate average is positive, it means that people are still opening up long positions. And of course they are. And that's why we're seeing the majority of the 24-hour liquidations coming from the long side with 1.2 billion. So right when you thought nobody had any money left, they clearly do, because you're still seeing massive liquidations across the board. And you can see over here, long still trying to build up, still trying to buy the dip over there. Look at that. The histogram moving towards the upside. That's the funding rate turning positive on the hourly time frame, with the open interest building towards the upside, which means they're trying to buy the dip until such time as the retail get completely flushed out and stop trying to buy the dip. That is when you'll typically find a bottom. And I'm not seeing enough signs yet for that to take place. We are seeing some technical signs of support, which are outlined today. We've had these planned out months in advance, such as the fair value gap coming into the 72K region. But when you look under the hood, which is this, right, you're still seeing them attempt to buy the dip, and we're still seeing a very, very low volume environment, right? So as it currently stands, spot continues to sell off over there, and this has been the ultimate target. I have outlined this chart extensively too, and I said, well, this is where we need to see the intersection between the upsloping trend line over here, which has created these macro lows, and the diagonal over here as the first area of interest. But it's not to say that by absolute 100% this is going to hold, right? We need to gauge the momentum, and that's why I want to look at things like this to see, what are the traders doing into the zone? I would prefer to see the traders go short with negative funding over here and a massive buildup in open interest, which would tell me that hitting key support, you're probably going to get major support and some sort of a reaction off of that zone, right? So that is the zone that we're looking for. That is the sweet spot. You can see how close we are to that. Now, if we start to close multiple candles below $74,000, $75,000 over the next couple of days, that's where things could get really, really ugly, and you could capitulate to much lower levels. So only time will tell. I'll have my finger on the pulse. Of course, guys, for those of you in Whale Room, I'll be there for you alongside the rest of the Whale Room traders. They are currently posting right now. They're also doing live Zooms and things like that to keep you guys safe. So that is what we're looking at over there. Let's continue, right? Here we're approaching very, very quickly into the key support level. Theoretically, we're in the fair value gap, but I mark out the equilibrium of the fair value gap, which is the midline of that fair value gap based on the inefficiency candle. And that comes in where at 72,510. So watch on a low time frame as price hits 72,510 and attempt to take the long trade if you see signs of strength. So you zoom in, for example, on the hourly time frame, and what you're looking for is you're looking for something like this. If you sweep that level, you put in a bit of a move on a very low time frame like that, put in a higher low. There you go. That's your entry over there. Stop loss goes below the previous low, entry at the high low over there, and then you have a pretty tight stop loss, but still volume is declining. We kept rejecting from this trend line over here. But the good news is if you look over here at this little volume void over here, there we go. That is a little pocket that will hold as support, potentially, and it lines up as confluence, right? So I do like this area possibly for a bit of a bounce. But again, higher time frame, there are things that are in trouble, right? There is still trouble there. So if you do want to take this trade over here, go through over here to the link in the description below. You'll see over here, it says FEMIX over here, $2,600 sign up bonus. There is also a great opportunity for those of you that do want to take this on FEMIX into that fair value gap. I might be straight after the show looking to take that trade over here, pending the low timeframes. But if you use that link, you'll get your sign up bonus. On top of that, there is another link that's just below that where you can apply for VIP fees, right? So I really recommend go to that, apply for VIP fees. The VIP fees over here, if you become a star VIP, you're basically trading for free, right? So click there, register now. It will open up a page over there and you can go through and attempt to get those VIP fees, right? Okay, going back to the potential bullish case scenario. Again, there's no guarantee that this holds, but this is where everyone was getting very, very bullish over here. And I told you I wouldn't if I were you. I'd remain very, very cautious. You know, there is the possibility that if you do hold that fair value gap, which we've outlined over here, and you get the long trade, this could still become a falling wedge, right? A falling wedge is a bullish chart pattern where you're looking at continuation higher, at least back towards these highs. This is the bullish hopium case. It's not necessarily my base case, right? Because you can see if you look at these momentum oscillators, there's still a lot of work that needs to be done over here, right? You can see the momentum oscillators are still moving towards the downside on the daily time frame, and never even mind the high time frames are very, very, very still bearish, right? So keeping an eye on that, if you do get that at least breakout of the falling wedge and you do get the long trade off of the fair value gap over there, probably I'll target the next side over here, the upside liquidity, $54 million worth of liquidity coming in at $85,000. And then you can reevaluate over there. If it can get back above that, hold there, then maybe you're starting to break out. Okay, but again, going back to my messaging over here, right? If we go into the, let's just go back there, the whale room messaging that I dropped over here. Right now, I'm taking it as it comes, level to level. I'm being very, very cautious over here. I might try and scalp a long trade, but am I going in with size yet? I'm not convinced, right? I'm not convinced, right? So if you're confused about all of this, by the way, guys, you can join 𝗪𝗚𝗀. It's completely free. You know, most of you would have saved a lot of money if you've already done this. You need to understand risk management. Go through to the risk management module. If you want to unlock full access, this FEMIX link will generate a user ID for you, right? There's a user ID on the top over there. That user ID will gain you access not only into this course, but any of the other courses, right? Because there's a fee. These are usually $2,000. Signing up to the exchange links below get you in completely for free, right? Cool. Let's get a little bit into the altcoin mix, right? Bitcoin dominance continues to rise over here, but you are approaching a major resistance zone, right? Now, it would be insane if we had some sort of an altcoin season from here. This Bitcoin dominance run has been absolutely brutal, and I'd imagine you're not going to get that until such time as the Fed actually pivot. Now, maybe they come out today and create some sort of an emergency meeting as you've hit this trend line and you do lead into a breakdown. I still think it's wishful thinking, and you're probably better off waiting for the break of structure. What is the break of structure? Well, if you're in a downtrend in USD pairs, you're putting in lower lows and lower highs, you're better off waiting for that higher high and then buying the next high low, right? Meaning there's plenty of time and opportunity to still get long, and you don't necessarily need to try and catch a falling knife. So if we look over here at the USDT dominance, you can see it's got this parabolic downtrend over here, which is now broken. The scary thing is typically when you break these parabolas to the up or the downside, depending on if it's a bullish or bearish parabola, you typically put in a 70 to 80% move. Now, if you did do that, that would mean going all the way up to 8 to 9% on the USDT dominance. That would essentially put you in a deep bear market, right? If you do see a move like this, it's going to really damage crypto. So again, taking it level to level, you know, these are some of the things we're looking at. You had a key range low over here. Here it is, a key range low. There it is. You then have a key range high over here. There's your key range high. And then in the middle of that, you have, of course, your mid-range, right? Which you are now approaching into this area. This was support, resistance. Maybe you get lucky and there's a bit of resistance over here, which means it's high time to pay attention, right? Definitely high time to pay attention. Look at the way these things move together. If you see something like this and it breaks down, then you'll simultaneously expect that you should see something like this, right? You should see the USD pair holding here. So if the USDT rejects off that resistance, then you're looking for the deviation over here at the fair value gap, and that potentially opens up the long trade, right? in the short term, and then we can reevaluate tomorrow. That's why come back tomorrow, watch the show each and every single day. We will reevaluate. That's what we're looking at over there, right? Not only that, but we've been tracking this parallel channel for the USDT dominance. Again, if USDT dominance goes up, crypto goes down, because it means money flowing out of those cryptos into the tether pair, right? The stable coin. Now you're getting the move up off this, right? Higher lows, higher lows, higher lows. That's what's creating the lower highs in Bitcoin. And now you are fast approaching our target. This has been the target. So it's all coming together, right? Make sure you keep your finger on the pulse and you watch for the sweep of that fair value gap. If you do hold that on the low time frames, again, it's a worthwhile long trade to take with a tight stop loss below whatever the new swing low is, right? Okay, we can have a look at some of the rest of the markets and the altcoins and things like that. You know, this is really approaching your dead zone. Today is a do or die situation. This whole week is a do or die situation for the broader crypto market, because if we do start to retrace this full move over here, this is going to be pretty bearish, right? If you look at this, remember, Bitcoin has yet to come back into the gray box over here. Whereas if you're looking at this over here, you got a pretty bearish outlook with the total cryptocurrency market cap already getting very, very close to that dead zone, threatening this area, the order block that led to the entire move up, right? So you need to see bulls step in very, very, very soon if they're going to save price action. And Total 2 is already warning you, because Total 2 has already given it up, right? There it is. Total 2 broke that area down. Let's maybe change the coloring over here to make it nice and clear for you guys. There it is. Total 2's already broken that area down. Let's have a look at this. You know, possible a little bit of support coming in over there. We'll see if you get a small bounce on Total 2 at about 772 billion. Total 3, let's have a look at that. Hasn't broken that level down yet, but getting very, very close. Others against Bitcoin, very bearish, broken this down, also taking out the higher low structure, creating lower lows, meaning altcoins are getting wrecked against Bitcoin. And then we have over here Total 3, which is the altcoin sector measure against Bitcoin, also really bearish, coming down. And same thing over here. Others against Bitcoin, how much further has it got? 35%. Remember, we outlined over here, there was always a possibility that it could do that, revisit all the way down to the range lows. I'd imagine the only way this happens is in a very serious crash. If Bitcoin does go down to, you know, $50,000 and catch up to the stock market, that probably would drop altcoins as much as 70% very, very, very quickly, which would play out this move, measuring others against Bitcoin, right? So that's that over there. ETH BTC continues to get hammered towards the downside, with your next major support coming in at 0.01686. And I took that from, you know, those lows there that occurred in 2019. So that is your next level, right? Again, it's always safer to just wait for the confirmation of the breakout. We spoke about that when everyone was getting really excited over here. We said, rather wait for it to get back above this level on ETH BTC. So a breakup structure, and then you can buy the next high low. And by being patient, you've now saved yourself a lot of money, because it's now come over here. So we can lower that level down now. Now the level that you're waiting to reclaim is going to be here, right? This is going to be support, underside resistance. Now you're waiting for this to get back above 0.0227. Don't go long until it gets above 0.0227, or until such time as you see a reaction, maybe down into 0.01686. Okay, so a lot of things going on. Many, many, many different moving parts over here. The stock market will be interesting today. And this is, again, just looking at that fair value gap on the 4-hour time frame. Also, you can see the higher low structure over here on Bitcoin, right? High lows, macro high lows. This trend line does meet up really, really nicely as confluence, right? So observe as price comes into the zone over here. Observe as it comes in. The way that I do this practically, which I explain, again, guys, I explain this in Whale School. Use the Femex link over here. Use the user ID to gain access into Whale School. But the way that I use this is I would typically go into like an hourly time frame or even a 15-minute time frame, and I'll just sit and watch, right? Which means a little bit of time in front of the screen as you approach your area of interest. Where's the area of interest? Well, it's always been over here, right? So a little bit of screen time as you approach that area of interest. And if you start to see, you know, price coming down, sweeping into this region, it seems to be holding. You get a nice sharp reaction over there. Put in the high-low structure. Simultaneously, funding has flipped negative into that zone. Open interest is built up, showing shorts are taking the trade at support. then you look for the opposite side of the trade, which is the long trade, right? Again, I know it's confusing. If you're serious about your education and you want to go a step further, you need to join Whale School. And most of you actually can't afford to not be in Whale Room, to be honest with you. Most of you would just think of how many hundreds of thousands or millions of dollars some of you would have saved if you were just in Whale Room. All of the info has been there, right? So links are below for those of you that want it. We'll see the rest of you later on today. We are doing the Whale School live session. I'll catch you all on the next one. I hope you stay safe out there, and I will see you again. Cheers for now.